Hi everyone, this is Clement and today I'll be doing a product recommendation. So I've launched a video for 2.6 and 3 million budget as of now. But today I'm going to cover if you have a budget of 1.8 and you do not know what to invest in this year. This is something that I thought it's more like a hand-picked product that you can consider in the market today. And if you're wondering, is it a good time to invest this year, or is there any OCR or RCR project that you can potentially look at, then based on 1.8, here's my recommendation. Okay, so before that, I want to set some parameters first. So these units are exact units available at this point of viewing. These units are also in the post-launch phase, and the reason why I'm looking at the units at the post-launch phase is also because there are actually quite a few hidden finds that you can get. If you look at the past 6 months, some of you might have gone through the balloting process of a lot of other projects but may not have gotten a good queue number to be able to commit to something. But there are some good finds in the post-launch phase that you can consider. And of course, this unit that I'm recommending, it's also something that holds the minimum risk. But at the same time, I wanted to highlight that cheap doesn't mean good. In the next couple of slides, I will kind of briefly share why cheap doesn't mean good. And the reason why I'm doing this is really understanding where the market is going and pointing out the safe buys for you to consider rather than looking at the options out there that are in the new launch market. I want to caveat that depending on your objectives, your options will differ. So it's best to understand your objectives before knowing that you are making the right and the best possible decision. Okay? So why do I say that cheap doesn't mean good, right? So because one of the examples here I can share about is, so Wing Tai launched the project called the M during the COVID period, but the units there were sold at 2004-ish per square feet. And the reason why 2004 per square foot was very cheap at that point in time was because just one street down there was Midtown Modern that actually launched at almost like in between, right, about 2008 per square foot. So when you see prices that 2008 per square foot to all the way to 3000, even Midtown Bay has hit 4000 per square foot today. At that point of time where they launched at time, the M actually was sold at about 2004, and there were some units that were sold at about 2002 or even below 2001. So at that point of time in the city, you can get something at 2001. It sounded like quite a pretty good deal. Then after that, when you see that the project has TOP but you don't see much demand coming in, whether it's a sale or for rent, because maybe when the project has reached its TOP stage, there were quite a number of units for sale and for rent at the same time. I personally tried marketing one unit for sale and for rent, but there were very little inquiries because it's just like a lot of units kind of flooding the market at that point in time. In today's context, if you see, for example, One Burnham, they suddenly released some fire sale units all at 2007 per square foot, but we don't know if the demand is going to be strong enough for people to kind of be able to transact fast enough. So in this case, like the M, I would think that most of the units are stuck. They either have to rent out at a lower price, or initially the plan was to sell, but then they have to rent it for short term and holding back their other investment plans. So that's why, even though it sounded cheap at that point in time, like One Burnham right now at 2007 per square foot sounds really cheap because it's kind of like a 20% drop from what the launch price was. But we need to understand where the demand is coming from and whether there is going to be a rental demand in the area before thinking about investing in something like that. So before I talk about the product specifically and what I would recommend at 1.8 million budget, I wanted to kind of lay out what the difference is between a new and a resale property. Okay, so in this case, this column over here is a new property and the second column is a resale property. So if today you have a 1.8 million budget, you're looking at either a BUC property, which is building under construction, a new launch, or you want to look at a resale property. Here are the differences. Based on projected growth over the next 3 years, for normal growth that we see for BUC properties, we are actually estimating about 5% growth, while resale properties, because there is fluctuations in the market, so many sellers in one project, there might be some price drops and then it takes a while to come back up. Generally, we project 3% growth with other factors in mind as well. But because you have the ability to rent it out for a resale property, the project is already completed, you will rent it out at about $3,000 a month, okay, and you get that rental income of 100k. So if you talk about gross profit, not considering other expenses at all, the gross profit that you make is actually quite similar. So upon TOP, let's say upon 3 years later, your gross profit is actually quite similar, considering that for a resale property, you actually can rent it out for 3k a month. And then when it comes to BUC property, your bank interest is definitely slightly lesser or half the amount of a resale property, and that's because for BUC property you go by progressive payment, and because interest rates, even though it's higher on progressive payment, the disbursement amount is lesser, so overall your interest is lesser. And at the same time, for BUC properties, you don't have to pay any maintenance, property tax, any renovations or finishing of furniture or fittings, or any commission. Your one and only expense is actually the bank interest. For resale properties, in that case, if you rent it out, you do need to pay maintenance, you do need to pay property tax for non-owner occupied property tax, and at the same time, you do some renovations, you furnish the place, you pay agent commission. Total actually is almost 3 times of the cost of if you buy a BUC property. All in all, right, if you look at BUC properties, there's not much of a disadvantage because at the same time, there is less cost for you to think about and you only need to think about the bank interest. Okay, so why am I recommending for a 1.8 million budget today? Honestly, there are not many options in the market because all of them, the good ones, have all been taken up. But what I want to share with you is more of this particular 2+ study layout at Sora is along the Jurong Lake district, and this 2+ study is at 732 square feet. Okay, so we have low floor units going at 1.6, 1.65. So I'm buffering 1.8 because I would think that there are people that want to cater for a higher floor unit, for example. But this 2+ study here comes with a study in the master bedroom, and then you can lead out to the balcony as well, and then it's a 2-bed 2-bath dumbbell concept, which is very typical in the market today. Okay, but why do I want to point out the lower floor unit over here on stack 11 and stack 2 at 1.632 million thereabouts? That's something you can get under 1.7 mil for a 2+ study at 732 square feet here at Sora. Okay, but this is the more important point. The more important point here is understanding this high floor low floor theory. There are a lot of cases which I'll share also later where if you get a low floor unit, for example, at 300k lower for a 2-bedroom unit, and then upstairs is selling at 300k more, the chances are for you to be able to make a decent profit and just needing to sell at the highest floor price, it's very possible because the project for that size has already transacted at 300k more. So you entering at a lower entry price at 300k less, it presents an opportunity in itself. Okay, so what I'm recommending is mostly the lower floor units at 1.632. But if you look at here on this side, the higher floor units actually are asking 1.93, even up to 2 for this particular high ceiling unit. But on the floor space area, you're actually looking at 732 square feet as well, right? From here to here, you're talking about a 400k difference. And that is where your room for prices to appreciate and your room for profits is. So just understanding it a bit further and another layer, right? Just wanted to share a bit more on how developers price their units, and so that you can understand a bit more about how much buffer you can get if you enter at a lower entry price versus what you can potentially sell at. So this is Treasure at Tampines. On the first day of launch, out of 2,200 units, they sold about 272 units on launch weekend. So they sold it at about 1,300 PSF. Based on that, right, actually it's only about 10% of the units of the entire inventory that they have. So at that point of time, they just kind of hover around the prices without really shifting or increasing the price at the same time. But at about 1 year later, they started seeing them selling about 100 units a month, and then they got a bit confident, so they increased their prices to another 100 per square foot. And then at phase 3, which you realize that the inventory is much lesser now, they started increasing the prices for some of the units across different bedroom types, and then they kind of ended up at almost 1,580 per square foot. So from phase 1 to phase 3, the difference is about 200 plus PSF. If you realize, for people who entered at phase 1 and phase 2 in the year 2019 to 2020, their profits are around the same kind of PSF that you can expect. So for example, for a 2-bedroom unit here, the price that they entered is almost the phase 3 price that people will have entered. So there, the profits that they make are quite significant. So people who entered at the first phase 1, phase 2, which is in 2019 to 2020, so they bought it at about 800 plus K, which is quite cheap if you look at it today, the 2-bed 2-bath unit. But in 2021, it has reached phase 3 by then. So then the units, even though they are low floor units, were sold at about 1.1. So the difference here between here and here, right, is almost 300k difference. And if you look back at what we just shared for those people who sold it eventually, this is the exact profit that they have made for phase 1, phase 2 buyers. But if we talk about high-rise development, for example, this is Avenue South Residences. How do developers price their units in high-rise developments? Most of the time, you see a very huge difference between the lower floor unit and the higher floor unit, such that it's almost like a 500 to 600 per square foot kind of difference that you're looking at. So in this case, phase 1, those people who bought low floor units, 6 to 20, they enter at about 1,008 to 2,000 per square foot. They make a profit of about 200k to 270k. For phase 2, people who entered later at the stage as well, they bought the mid-floor units, about 20 to 35. They entered at about 2,000 to 2,001 per square foot. Their profits are about 100 to 253,000. But people who entered at high floor and above, from 36 onwards, they call it like the premium product, where there are premium furnishings and all that. People who entered that actually entered at about 2,002 to 2,003 per square foot on average, but they only make a profit of 80 to 100k. Okay, so if you see from phase 1, phase 2, phase 3, talking about high-rise buildings, actually there is benefit in looking at the lower floor units for the safer entry price, because the market needs some time to absorb pricing like in phase 3 and also be able to make that kind of profit. It will take some more time. So more importantly, what I've been emphasizing is why entering what is important. So here are some examples of not just Avenue South, Copper and Newton, also relatively high-rise development. Low floor versus high floor units. Entry price is almost 200k cheaper, but yet the low floor units make more. Okay, Seaside Residences, first floor versus 20th floor, also on the exact same stack, exact same size. The first floor unit actually bought for 257k cheaper, but actually profit about 100k more. Okay, so more examples here. Clement Canopy, also high-rise development. Low floor bought before the price increase and it's quite significant. It's almost 300k difference. And for low floor units, actually profit about 165k more. Okay, so same for Principal Garden. Also phase 1 pricing, about 200k difference, but profit exactly 200k more. Okay, so why we want to understand and look at this as a product to think about is because at Sora, right, the lower floor units are actually going at 1.63 plus million. But if you look at the top floor units at 18 and 19, you see that the difference is almost 400k difference. So in this case, there's a built-in PSF gap of 441. That also means that there is a potential built-in profits of about 300k. So today you can enter phase 1 price as low as 2002 per square foot, which if you look about OCR region has also hit 2006 per square foot for a 2-bedroom. And I would consider a high floor unit here at phase 3 pricing at 2006 per square foot. So the gap is huge, which gives you an opportunity to enter at something lower. And what you need to do is, for example, if these units get sold out, right, if they do increase the higher floor unit prices, actually your phase 3 price can hit to 2007 per square foot, giving you that kind of built-in profits of about 400k. So the mindset here and the strategy going into this one is really understanding that as long as you enter at a lower price over here, you have the opportunity to sell at the high floor price, which has already been transacted in Sora. Eventually, you will have a built-in profit about 400k. So in conclusion, this one at 1.8 million, it's a low capital outlay kind of product. It also has low risk because you know that units upstairs are already selling at 400k more. You get the same or even more capital gain because you know that the price gap between the high floor and low floor is high, and at the same time the valuation will definitely match because even at the higher floor the unit has already been transacted of the same size, just higher floor at the kind of pricing that you're looking at, which is about 400k difference. So I hope this is clear. This is my contact number, it's my social media. You can also pause this video and also scan the QR code to reach out to me if you want to. And if you have any other questions, or if you want to understand a bit more about this strategy, or you want to know based on particular budget what you can look out for, you can click on my YouTube channel and then you can see the other recommendations based on different budgets along the way. So if you haven't liked or subscribed, feel free to subscribe to my channel to look out for more videos. I'll see you in the next one. Bye!